What's going on, guys? Hamilton here with the Trading Initiative, here to make a video regarding the Wyckoff market model and or the 4 stages that are becoming increasingly popular to talk about on FinTwit and other social media platforms. This is something that is ingrained inside of TTI, this idea of market cycles, and we can catch some of these intra-cycles when we can properly identify them ingrained within our system, and we are currently trading them right now. So I'm going to make a video on it. Hopefully this is going to dispel some rumors and try to clear some things up. So without further ado, let's get into the classic Wyckoff market model. So the Wyckoff market model essentially tries to categorize 4 different stages, if you will, phases of the market. And those 4 stages look something like this. So you have stage 1, or your accumulation, you have stage 2, or your markup, you have stage 3, or your distribution, and then you have stage 4, which is your markdown period. Now over time, these 4 stages, right, these 4 phases add together to create, hopefully, an uptrend, if you will. Every single accumulation is going to be slightly higher than the previous one, which is going to give the market its classic uptrend that everybody likes to trade. When you understand that the market oscillates in these 4 stages, these 4 phases, however you want to describe them, you can start to identify them on charts and understand that where opportunity lies inside of these bigger moves. This is not specifically a day trading type of idea. This is more of a swing trading or position trading or investing idea, right? These are definitely moves that play out over weeks or months or quarters, not just intraday, for example. Okay, so as we look at something like a Shopify sort of play, right? So let's go ahead and draw this one more time up and over here. Remember, we have the accumulation, which is your stage 1. We have the markup, which is, you have the markup, which is your stage 2. This is where price is obviously hitting higher highs. You have distribution or stage 3. This is where your big buyers during stage 1 or accumulation are starting to offload their shares. Then you have stage 4, which is your classic downtrend, right? So one more time, this is categorized by generally a horizontal channel. As you can see here, we are breaking up and out of a potential accumulation pattern in shop, followed by stage 2, which is your markup, which is a classic uptrend. Stage 3, which is your distribution, which is larger institutions that accumulated down in stage 1 are looking to offload their shares. You generally get a range high, and then followed by the markdown or stage 4, which is your classic downtrend. Now, when we look at charts like Shopify, for example, we can categorize this essential entire move based off of this concept of this Wyckoff market model very clearly, actually. You can see going back to 2020, even though there was an insane event, right? The COVID lockdowns and all of the stocks going to absolute all-time highs obviously influences these cycles. But you can see we'll start with the distribution idea here. This would be your stage 3, where institutions that were buying previously are looking to offload shares. This is generally viewed as a horizontal channel to the right with a support level and a resistance area that's tested multiple times. And then you get the markdown period or your stage 4, which is a classic downtrend where essentially institutions are out of their position and now it's just majority retail and everybody else trying to get out as quickly as possible, selling on top of each other, causing massive rundowns, right? Followed by a new stage 1, which is your classic accumulation. Once again, support level to the upside, support level to the downside, resistance to the upside, and we oscillate here. The bigger the base, right? This is TA 101. The bigger the base, the longer the base, we can expect larger breakouts. So if you understand and identify these accumulation patterns, you can say, well, shit, this accumulation pattern, this horizontal channel that was range bound, lasted nearly almost 1 year, about 2/3 of a year. That means that there has been ample time for institutions and other large financial funds, etc. Excuse my verbiage here. It's super early in the morning in Brazil. They've been accumulating shares. We have the support level down here at around $25. We have a resistance area around 42. So as it oscillated between 42 and 25, institutions soaking the bid, accumulating larger positions before that next markup period. So what I want to focus on is it's not just Shopify that's showing us this stage 1 or this accumulation phase breakout. There are other areas in the market that are looking like this as well. We can see Zillow, for example, is another classic markdown, accumulation, stage 2 breakout. There's lots of charts in the market right now that look like this, but what I want to focus on really quick is the statistics behind it. Why does this actually matter? So Bukowski, if you don't know who he is, he's a great statistician. When it comes to technical analysis, he has aggregated, tens of thousands of data points in terms of price patterns, candlestick patterns, how often they work, how you should be trading them. But also he has these studies on widely used concepts that revolve around technical analysis, and in this case, this Wyckoff market model, or as he is interpreting it, the Stan Weinstein's Secret for Profiting in Bull and Bear Markets. This is a book, but this is his interpretation of the Wyckoff market model. You can see stage 1, stage 2, stage 3, stage 4, and they throw a 30-week, moving average on it. We're not going to focus too much on the study itself. If you want, you can go find it. What I want to focus on, though, is the results and why this concept matters from a longer term standpoint in terms of trading, right? So what he did is he wanted to go and look at all 4 stages and understand when was the best buy, or when was the best time to buy within this market cycle. Let's go back to shop because we have everything already drawn there. Where is it the most profitable to be looking to buy inside of this construct, this model, this stage 1, stage 2, stage 3, stage 4? Where is it the most profitable to buy, and then where is it the most profitable to sell? So we can go ahead and look at the data really quick. And he essentially is saying if you are buying stage 1, the percentage of the times that you're going to be in profitable trades is 69.3% over time. There's 127 sample size, which actually for him is not that large. He's usually multiple hundreds of samples here. So this is a relatively small amount of samples for Bukowski, but still 69.3 is an outlier here. If you are buying stage 1, once again, stage 1 is this accumulation pattern, right? These horizontal channels that take sometimes up to a year to develop. If you're buying that 69.3% of the time on the breakout, you are going to be in a profitable trade. And if you sell stage 2, which is your markup period, that's stage 2 breakout, right? This markup period generally categorized by higher highs, something like this. He says that 81.5% of the time it turns into a profitable trade. So if you're buying stage 1 and you're selling stage 2, is de facto the best type of opportunity you can get when you're trading this type of concept. But I do want to point out really quick, it's incredibly hard to just want to sell stage 2 because we don't know how high stage 2 can go. We don't know where the top is necessarily going to be. And especially if we're in a very large market cycle, this could hit all-time highs. So for example, we bought this breakout on Shopify. If we were to sell it right here, that's a profitable trade. As a matter of fact, the contracts were up 200, almost 300% right off of the bat, really within a week and a half. But what happens if we come all the way up to $130, $140? We left a lot of profit on the chart here, and we might never have an opportunity like we did back at $40 to get long. We might be chasing and getting chopped out like we saw this week. So it's incredibly difficult to try to time the stage to sell. And so what he did is he actually went through and looked at, well, what happens if we sell at stage 3 as well? So if you buy stage 1 and sell stage 1, you generally lose. And that makes sense, right? You're selling in here, you're buying in here. There's no definitive breakout. You're just oscillating between a resistance and a support. There's no real edge here from this type of trading system where we're trying to capture, like I said, weeks, months, or quarters worth of price movement. You don't want to just buy inside of a range. If you buy stage 1 and sell stage 2, on average, you gain 25.9%. Once again, sample size of 62. And if you were to buy stage 1 and sell stage 3, you'd make 21.5%. So that is, if you look down the list, those are the 2 most profitable times to be buying and selling. Buying 1 and selling 2, or buying 1 and selling 3. The edge is obviously in 2. But there is obviously an opportunity here to sell at stage 3 as well. Now, I want to point out really quick the difference between selling stage 2 and stage 3. There's an edge in being able to sell at the pico top of stage 2, and that makes total sense, right? The problem is that it's very hard to time the exact top of stage 2, and it makes sense that in stage 3, as we start to end the higher highs type of price action and we start to oscillate and we start to get range bound, that we're probably not going to be selling the absolute top here before we recognize that the uptrend is over. And now we are entering stage 3 where we are in distribution. And so indiscriminately selling within this stage 3 box is inherently probably going to give us less profit than absolutely timing the top, but it's also safer and more consistent once we realize that we can identify stage 3, right? So this idea of absolutely timing stage 2 at the very top is it's great if you can do it, but most people can't. And as in my experience, at least, the people that are able to time the absolute top in these swing type of positions generally are more lucky than skill, and there's nothing wrong with that. But it's not something that you could probably build an entire system off of absolutely needing to time every top. Instead, look at the broader idea and the broader picture here. If you're within stage 3 and you were able to buy stage 1, if we go back to the stats here, 21.5% on average gain on the share price, not the option price, by the way. So this would be an absolutely massive move in options contracts. That is a fantastic trade. So this is the basic Wyckoff market model in a nutshell. One more time: accumulation, markup, distribution, markdown, and over time, you get a bunch of these cycles together. You should be going up and to the right, hopefully in a stock that's not going to zero. And right now, the market, if you're on social media and stuff, this last week specifically, very challenging trying to grab a foothold in some of these names that have already broken out. This was our game plan coming into this week. Take the gas or take the foot off of the pedal. Do not throw a bunch of money into the market. If we were able to grab positions in late December, early January, which we were, continue to ride those positions. Don't try to time the absolute top on these. But if you didn't, maybe stay out and wait a little bit, because we expected the market to be incredibly volatile and chop people out, and it did last week. That's a construct of this accumulation phase breakout coming into a markup period. The market's not just going to give people a freebie, right? It's not just going to say, feel free to buy whenever you want, no problems. It's going to try to take the late buyers out into the deep end and drown them. And in my experience, it happened this last week, which is why we took our foot off of the gas pedal, and instead we just decided to stick with positions that we had already been accumulating at the end of December in towards January. And it worked out for the most part. We did get back some profits, but we are in this for the longer move. Like I said, we don't know how long this markup period could potentially be, and therefore we don't want to be trying to sell early, because that is a detriment to longer term swing trading, right? Selling a great position early can be, or oftentimes is, more detrimental than letting a position, for example, go to zero. You just don't know where, how high these things can go and how incredibly profitable the positions that you grab are going to be until obviously the move's already over and hopefully you're not out of the position entirely. Okay, so this is a great, really quick overview of this concept of the Wyckoff market model. You're going to see on social media lots of stage 2 breakouts. This is what they mean, the stage 2 breakouts. You have Shopify, you have Zillow. Those are two positions that we are in. They don't always work. For example, Under Armour is one of them that was coming out of a stage 2 breakout that obviously failed. So this isn't, we're not trying to sit here and sell you this idea of the perfect system, but this Wyckoff market model has stood the test of time for 100 and what year is it? Around 100 years. Seriously, the Wyckoff market model is a part of the Dow theory, which has been around for over 100 years, and it essentially just tries to categorize how the market oscillates and moves back and forth and creates these mini cycles within a larger market. So if you have any questions, feel free, post them below. Let me know what you think about this Wyckoff market model, and also if you find any other tickers that are breaking out into these stage 2 breakouts, feel free to post them below and I will look at them. We want to be buying these. These are the plays that are hitting right now. Extra points if the 200-day moving average is firmly below the price already and starting to curl to the upside. We want ultimate conviction when it comes to these setups, and that right now is what's hitting for us. So I hope you guys enjoyed the video. Let me know what you think below. Like and subscribe if you like this content, and I'll catch you in the next one.